Hello everybody. So in this video I want to address BTC Torque, this new concept that was introduced by Michael Saylor at the latest earnings call. But before I do, I want to point out the flash, the buy card. The buy card was posted on X, too much blue, not enough orange. So he's going to be buying some Bitcoin. He's executing his capital raising plan, 32% complete. That's going to increase. And it seems like he's going to do that most weeks, except, of course, the occasional week when he doesn't buy, to not stay too predictable. And my guess, and perhaps this guess is aligned with today's topic of BTC Torque, my guess is that for this week, he's going to do limited ATM because he was mostly out of the money on the former ATM, and the new ATM was announced on Thursday. So I don't think he's going to do much ATM, and I think my guess is that he's going to ramp more STRK and strife this week. STRK and strife this week will be ramped up, but overall I expect a small buy this week. And the beauty of this thing is that I may be 100% wrong, and it's probably better for volatility that I am 100% wrong, because if I'm 100% wrong, that means that a lot of people are probably wrong too, and that means that it is a pro-volatility event, and the more volatility there is around MicroStrategy, the more people buy MicroStrategy because they want to earn those options premium. They want to build options instruments on top of MicroStrategy, which boosts the price to NAV, and the price to NAV is essential in understanding BTC Torque, as we'll go towards the end of this video. We'll cover this towards the end of this video when I talk about MNAVs and what is all meant by the curve, the MNAV curve. But anyways, today we're talking about the BTC Torque. So let's go from the beginning. MicroStrategy raises money via issuing financial instruments. It's a treasury company. It's very similar to an investment bank. It releases financial instruments on the market, and people buy those financial instruments. When people buy those financial instruments, MicroStrategy takes in capital, and the capital that it takes in, the entire capital that MicroStrategy takes in, MicroStrategy goes ahead and buys Bitcoin with it. And price to NAV is so essential because at a 2x price to NAV, that means that essentially the company is issuing at twice the value of the Bitcoin on the balance sheet, thus capturing the 1x beyond the 1x of dilution. And I've covered that before on the channel. Actually, I have a link that walks you through the math at the top of this video in the description. Click on that link if you haven't seen it. But the point is, when you issue $100 million at a 2x NAV, you issue $100 million of new equity at the market offering, you gain $50 million because the other 50 goes to dilution. So you gain about half. The BTC dollar gain right away when you issue $100 million of issuance. That BTC dollar gain is $50. And ignore the BTC yield, of course, here, because BTC yield is going to change at the stage of which MicroStrategy is in their yield journey, and it's going to change year after year, right? The more the bigger the bag grows, the bigger the Bitcoin bag grows, the lower the BTC yield, right? That BTC yield in 2030 will be, perhaps 10x, perhaps 20x lower than this. BTC yield is really dependent on the quarter. But what's not dependent on the quarter is the BTC dollar gain as opposed to the issuance. And so 100 million issuance at 2x and NAV, that's a $50 million gain. Now, a convertible note issuance, 100 million of it, that's a $64 million gain. Why? Because they've given up some of the upside. They're acquiring equity, but there's higher gains because that equity is acquired at a higher price. There's a higher strike price in the equity that is embedded within convertible notes and the strike preferred of strike. So for example, you're buying a call option embedded into these, right? And the call option famously for strike is about 10%. That's the call option that you get 10%. So you will need to wait until the price of MicroStrategy reaches past 1,000 shares in order for you to start to be able to convert 1-to-1. So that dilution is happening, but it's happening at a higher level from the current stock price. When you issue 100 million of equity ATM, the dilution happens right away at whatever stock price this is. When you issue convertible bonds or when you issue STRK, the dilution happens at a later date and at a higher stock price. And so that dilution is capped and delayed, and the gains are less for the person doing the dilution. For the new entrant, the new buyer of the stock, they're going to see a capped gain. And of course, that means that convertible notes and STRK convert into a BTC dollar gain for common holders of MicroStrategy, for MicroStrategy of 64 million and 80 million for 100 million of issuance. And lastly, for strife, what is the BTC dollar gain? Well, the BTC dollar gain is actually 100. Why? Because the dilution of strife, it takes place in the form of fiat. It takes place in the form of fiat gains being redistributed down the road. So strife, costs money to shareholders, but it costs money in terms of giving up some of those dollar gains in the future. For strife, you're giving up some of the dollar gains in the future and you're giving it to the strife holder. In other words, strife is really the Bitcoin maxi solution to fundraising, because you give back the dirty fiat and you only give back the fiat. You don't give back any of that valuable Bitcoin derivative that is MicroStrategy stock. MicroStrategy stock is a Bitcoin derivative. You don't give up that Bitcoin derivative, you only give up the fiat. And so that's why when you think about a BTC, pure BTC gain, you actually gain everything in BTC because you never give up any BTC, if that makes any sense. And all four securities are could even generate a positive BTC dollar gain, but some of them are better. And the more the instrument is debt-like, the better it is. And this is where we get into Bitcoin Torque, BTC Torque. And so let's talk about the story of MicroStrategy right now. And let me show you the chart again. If you think this is a story about debt, it's not yet. One day, maybe it will be, hopefully, but not yet, right? Look at the common equity capital. Most of it is common equity. Most of the story is common equity. So most of the story so far for MicroStrategy has been about issuing new equity. And so how does it work? So year zero, you issue equity right now. You're issuing $100 million right now at a 2x NAV. You do a dollar gain, a BTC dollar gain right away of 50 million. And the other 50 million is given up to dilution. Then assume Bitcoin as an average annual rate of return, a return rate of 30% a year, every year for the next 10 years. And that's the maximalist view, and that's Saylor's view. And so we need to fast forward to 2035. We need to fast forward 10 years. So we have 100 million of new money coming in. 50 million accretes to the existing shareholder, that's the gain. 50 million is in the form of dilution. And then we fast forward 10 years. Once we fast forward 10 years, we look at year 10. We pay attention to year 10. And in year 10, we can calculate multiple things. The first thing, and which I think some people may be confused, because this number doesn't change too much, at least for more equity-like instruments, it doesn't change at all from the year zero. So that's why it could be confusing. But this is actually the year 10 calculation, but it doesn't change much. It means we diluted at a 2x Bitcoin multiple. And the way to think about the BTC multiple is that the higher the multiple, the better an idea it is to dilute. It's kind of like a P ratio. The higher the P ratio, the less the stock is undervalued and the more the stock is overvalued. Well, the higher this number, the more you want to dilute. And so what you'll see with BTC Torque is that number is not very attractive to dilute at. We want to dilute at a BTC multiple equivalent that is much higher than that, and that's going to be the strife equity offering, which I'll get to in a second. But that number, I would argue, is less important. And of course, intuitively, everybody knows that, because if you follow the call, everybody talks about BTC Torque right now. The number more important is BTC Torque. BTC Torque is the amount of money that you've made on the capital raised, but it's the money that accretes to the MSTR shareholder. It is not the given up gains. It is the money that accretes to the BTC to the MSTR shareholder. So BTC Torque is the ratio of BTC dollar valued created to BTC capital invested, and that accretes to MicroStrategy itself. So as owners of MicroStrategy, when he issues $100 million of new freshly minted MSTR equity via the at-the-market offering, the ATM, our gains after 10 years on that $100 million of issuance of new money coming in, our gains is a 6.9x. We gain 6.9x of the capital raised. Now, because the BTC multiple is exactly a 2, whoever buys the new shares at that point also gains a 6.9. They also gain a 6.9x. The BTC Torque, right? So the BTC Torque actually applies to new buyers of the equity, just like it applies to old holders of the equity. So even as MicroStrategy buyers, when we want to increase our MicroStrategy and we take advantage of the BTC new issuance of the at-market offering, you benefit just as much whether you buy a freshly minted share or whether you buy a share on the used market, like on the used stock market. Actually, it's very interesting. MicroStrategy is one of these stocks, one of the only few stocks where when you go in the open market and you place a bid on MicroStrategy, you may actually get a newly minted share, which I find very, very exciting, because most companies just do an IPO and then they're done, right? And then if you buy an Apple stock, your Apple shares are probably 20 or 30 years old. You can buy freshly minted shares every week almost, whenever he does the ATM. And this is a very democratic. That's a weird word to use, but this is a very, very democratic, very fair way to issue equity, because the newcomers are gonna earn just as much. They're gonna earn a 6.9x. Everybody makes 690 million in that example over a 10-year period. Whether you're the buyer of an instrument, the buyer of equity, or whether you're an existing holder of equity. So this is highly, highly accretive, and this is what traditional finance has a hard time understanding. Now, moving on to the converts. I don't want to spend much time on the converts, but the converts, you can see we are beginning to understand the value of sprinkling a little debt amount, right? Because all of a sudden, the convert is a 2.8x Bitcoin multiple when we are at about a 2. When this example starts off a 2 as a baseline, the baseline is a 2x MNAV for this example. So the converts actually increase that just a little bit to a 2.x, and the BTC Torque moves from a 6.9 to a 8.9. And this is kind of why I think the converts are now not the most attractive anymore to MicroStrategy. It's not the most attractive anymore to MicroStrategy because really, if you look at the difference in BTC Torque, it's not that huge of a difference in the BTC Torque. But the complexity, you got to do a new filing each time you do one of those. The complexity of the converts compared to the benefits relative to simply issuing new equity, that complexity is very small. And so this is kind of why I think converts are stuck in a hard place. And I kind of think that the convert amount, the amount that's left on the converts, like I don't think there's gonna be many more converts left. I think he's gonna be done with that 21 billion raising plan for the converts, and then he's going to be done. That's kind of what I think, because again, it's more complicated for him than to just issue Strike and issue Strife and issue the ATM. And we know Saylor likes the simple solutions. And also, it creates a lot of uncertainty on the stock whenever these converts are maturing or due to maturity. It creates a complexity. TradFi doesn't treat MicroStrategy right whenever they're like, they write articles like, oh, what's MicroStrategy has a $1.1 billion bill coming due in 2029, and are they going to be able to pay? You have all the news articles that make this. So I think the hedge funds that are munching on the converts, they should realize that this is going to be a rare thing in my view, because if we move on to Strike and Strife, let's begin with Strike. We see that Strike is much more appealing, and Strife is the most appealing, but Strike is much more appealing to MicroStrategy than the ATM. And Strike has a similar level of simplicity, in my view, to just the ATM. Yeah, it's a stock, it's a ticker, you control it, you can issue new shares at any time. So it is much better than the converts. And it has a similar simplicity to just issuing common stock ATM. But let's look at STRK. STRK generates a Bitcoin torque of a 10.4 out of $100 million. So that means that if we get diluted via STRK, well, it's a very good thing, because on the dilution, the total dilution, that's a 10.4x your money. So our gains are 10.4x capital raised, and STRK actually leads to a much lower dilution, because we're diluting at a 4.1x BTC multiple. Remember that the ATM, you're diluting at a 2x BTC multiple. This, you're diluting at a 4.1x BTC multiple. So that's much more attractive, much more attractive. And the BTC gain is higher, and it's substantially higher at a 10.4x. And so issuing STRK is much more attractive. And you can see that, right away when you issue STRK, you have a 20 billion BTC gain. And yes, you have about 20 million of dilution, but that dilution is really nothing compared to the BTC gain, right? So the 4x is really maintained here. And so it's worth it to issue STRK, is the point what I'm trying to say. And the best out here is strife. And why is strife the best? Because strife has a BTC Torque of a 12.8, and we diluted, really, strife, you diluted at a nosebleed a BTC multiple of 13.8. And why is that? Why is strife so attractive? Why is it so good? Well, it is so good because the gains given up to dilution in the case of strife, those gains given up to dilution are very little, because you're only giving up fiat. You're only giving up dollars. So when you issue strife in year one, the capital raised equals to the BTC dollar gain. Right? Capital raised equals BTC dollar gain in year one, because you're not paying anything in year one. You're just getting the money, turning it into Bitcoin. And then you start losing every year. Every year you start losing fiat. And so in the case of 100 million of strife, in year one, you've lost $10 million worth of fiat. But in the Bitcoin world, right, in the MicroStrategy view of the world, fiat is losing so much value every year. So yeah, every year, and this is cumulative, of course, every year you lose an extra $10 million, 10 million, 10 million, 10 million, up until year 10, where you've lost $100 million. You've lost $100 million of highly diluted fiat, right? What is $100 going to be worth in 2035, right? How much is a Subway sandwich going to be in 2035? Probably $25 to $30 is going to be the cost of a Subway sandwich in 2035. Probably, right? And so you probably want to dilute 10 million back then, and it's much less to you. So you're giving away that fiat. So you're giving up. Essentially, strife is financed by giving up fiat in the future, an asset that will be exponentially lower. And you get to keep 100% of Bitcoin, an asset that is going to be exponentially more expensive, right? Bitcoin has no top because fiat has no bottom. Max Kaiser, high priest of Bitcoin, as Michael Saylor calls him. So that's why he wants strife more than anything. MSTR shareholders, we want strife more than anything, and strike. And sure, I can put strike into the club, because strike and strife, frankly, they're fairly expensive. They're fairly easy to do. And the ATM is easy to do, and the converts, frankly, they are not that easy to do. Not as easy. And so that's why I really look forward to that. And now that we've seen these BTC Torques on all of this, now we know that if we raise 100 million of strife, we're actually doing 12.8 times our money. We're doing 12.8 times our money, and we're only giving up 100 million, right? We're only giving up very, very, very little. The strife owners just recoup their entire investment in year 10. Right, and so keep in mind, MicroStrategy did more than a 25x times your money in 4 years, and that's 1x your money in 10 years for Strife. And so Strife is, of course, an instrument that is for the debt markets, an instrument that is not done for the BTC investor. It's an instrument that is done for people who want to get more fiat. It's really a win-win. All of these instruments are a win-win. And so I will conclude with these, and you can look at the BTC Torque, and I think this is important to realize that no, like if you look at Strife is not 10 times better than MSTR equity ATM. In fact, Strife is a little less than 2 times better, right? So this is a very pro-equity, pro-dilution presentation. I love dilution. Dilution is still super high. It's just that dilution is great. Strife is even greater, right? Or let's put it this way: dilution is good, and strike is great. And Strife is great, but dilution is good because you're moving in dilution. You have 6.9x BTC Torque over 10 years, and with Strife you have 12.8x BTC Torque over 12 years. So it's not quite a double, but it's almost a double. It's almost twice as good. And then it's all about a spectrum, and I consider Strike to be, Strife is the most attractive, Strike is the second most attractive. I think equity ATM is the third most attractive, and I think convertible notes are the least attractive in there, just because, frankly, the return are closer to the equity, but the complexity is through the roof for a convertible note. And when you chart that, Here's a little overweight to think about it, because it's all dependent on the price to NAV. The example I've shown so far, and the example discussed by Saylor throughout this entire presentation, is an example of a 2x NAV, which is this line right here. That's a 2x NAV, right? But once the NAV goes up, and I really think 2x over a long term is going to hold. I mean, we're about 2x right now. I think 2x over a long term is a solid number. But when this goes up, when price to NAV goes up, all of a sudden the method really doesn't matter. When price to NAV will be 5x, I mean, at 5x, that's the red line right here. You should just dilute whichever way wants to dilute. Like whichever market participant wants to buy. If they want to buy common, you should issue all the common you want, right? If they want to buy, even if they want to buy strike or converts, you should issue as much as you want, because there's almost no difference at a 5x NAV. And keep in mind, this is a stock during the last bull run, it went past a 10x NAV, and so at 10x NAV, it makes no difference. But when times are tough, and let's assume times were to be very tough, and I don't know, MicroStrategy would fall to a 1.4x NAV, then it would be so much better to just do Strife and Strike, because Strife and Strike become comparatively much more attractive when the price to NAV is low. And the attractiveness of Strife, and I'll conclude with this, the attractiveness of Strife never changes. Strife is always as attractive regardless of MNAV. So when you raise money through Strife, MNAV doesn't matter. You should always raise through Strife. Absolutely always do that. And this is a good transition to the next video I'm going to make, which is the demand for BTC-backed debt is still very low because the credit rating agencies don't even consider the debt of MicroStrategy to be junk. It's not rated. It's unrated. It's worse than junk. It's not rated. They consider the debt of MicroStrategy to be worse than junk, to be not rated, even when you take into account when the earlier converts have more than a 50% coverage, 50%, not 50%, I'm saying 50 times. They have more than a 50 times coverage ratio, right? So it's like it's like a household who wants to go buy $1 million house. They want to borrow money to buy $1 million house, and they have $50 million of cash on the savings account. And they go see the bank. They say, hey, Mr. Banker, Mrs. Banker, I have $50 million in my saving account, but I don't want to touch my savings account. I like to have $50 million in there. Will you please lend me $1 million? And the banker replies, no, this is junk. This is worse than junk. You're not rated. I'm not going to lend you $1 million. Even if you give me a securitization of $50 million, I'm still not going to lend you $1 million. That's that. And this is because of 20th century principles in the credit rating agencies. which, by the way, have failed before in the 21st century. And these credit agencies need to wake up and start rating instruments the proper way, because they've made mistakes in the 21st century already, using the 20th century lens to judge things like, I don't know, mortgage-backed securities, etc. So I think Saylor's great new campaign is going to be getting on podcasts, macro podcasts, trying to talk to, the traditional investing community, to trying to have them understand the value of a strike, the value of a strife, the value of a convert. And this is going to be a natural progression. And Bitcoin-backed bonds, if you are a Bitcoiner, debt denominated in Bitcoin should be the most solid debt. You can be a conservative investor, or you can be a 60-40 type of person who likes to have your retirement in a 60-40 type of portfolio, and that 40, of course, is bonds, and you can want some Bitcoin-backed bonds in there, right? It's entirely possible for you to desire to have some Bitcoin-backed bonds in there because you trust the ability of Bitcoin to still be there, and the ability of MicroStrategy to still be there. You trust that ability more than, say, the ability of Congress every 2 years to raise the debt ceiling, and you trust that more than, say, the ability of Congress to not bring up every 5 to 10 years the platinum coin, and about how the US should just print, the US Mint should print 1 trillion platinum coin and use these platinum coins to inflate the money supply, right? We hear this madness of MMT. We hear it all the time, and this is not included in your credit rating agency ratings of these bonds, and so it makes a lot of sense to have just a protocol rule money. Anyways, that's of course what I think a lot of us think. But anyways, this was a tangent. So next video will be about the credit rating agencies and trying to get those debt-like instruments to be rated as investment grade and to be appreciated by market participants, because the more they are rated, the more they are appreciated, the more people will buy Strike and will buy Strife. Anyways, this was not investment advice, not financial advice, only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.